Namaste and welcome to the presentation on Nestle India. The company is 63% owned by its principal, Nestle SA Switzerland. Its operations in India are more than 60 years old. The food brand Maggi, one of the major money spinners for the company. Maggi was introduced to India in 1983. The uniqueness of the business model of Nestle is evident in its share price, which returned 12.6% during the last 1 year. It was closely followed by Britannia, which is having 82,000 crores of market capitalization as compared to 1,66,000 crore of Nestle. The special feature to note is when the whole market and Nifty were collapsing during March and April, Nestle was registering a growth. Of course, it had to give way when Nifty took the lead after November. The path taken by the share price over a period of 12 months is reflective of the strength and resilience of Nestle as a food retailer. Major growth in April, October, and then a setback in January. On the whole, very impressive. Nestle has a wonderful product mix of baby milk products and Maggi, followed by confectionery and powdered liquid beverages. The composition is almost 50% from milk products, 30% from Maggi, and balance 10% from the last two product category. Milk products is a strong area of Nestle. Maggi is having a mass demand across the classes of society, market leadership, and the other two brands are of growth and consistency. Nestle started as a baby milk product company with the brands Lactogen, Cerelac, and there was advertising happening in respect of these products till 1992 when the act was passed stating substitutes of breastfeeding are discouraged and there can be no advertisement on that. Nestle converted this restriction into its advantage based on the relationship it had already developed with the public. All new entrants could not do any advertisement nor could they have a deeper penetration, and this acted as a strong competition-proof market for Nestle. And so far as Maggi is concerned, as has been proved, it is a mass market driven by volumes. Nestle has registered growth in its profitability mainly because of the proper usage of its product mix and its strength. Nestle has perfected the art of converting a challenge into an opportunity. When it lost the market with the Maggi crisis in 2015, its operating margin fell down to 16%. It not only recovered and was back at the original operating margin of 18, the last 2 years have shown its ability to grow from 18% to 22% of operating margin, which is a great achievement. And even during the current year, first 3 quarters, the margin stays at 21% on a TTM basis. Market has great expectations on Nestle as a company, and it is judged by the relation between the operating profits and its growth as compared to the market price and its growth. And as we will see, for every growth in profitability, it has been doubly rewarded by the market in terms of price. Up to September 20, as compared to December 18, there is a PBT growth of 14% and rewarded by almost 50% growth in the market price. And the market price movement after September from 146 to 160 is based on the hope and expectations of the market for the results of December 20. Arguably, the market will be considering the 2 previous December quarters. In December 18, the incremental profit was plus 45. In December 19, it was 92 crores incremental profit. And December 20 is anybody's guess, but expectations are running high. The chart is indicative of the crossover. It has had the 52-week high and the small fall in the month of January, but its stochastic RSI and MACD are supportive OBV is not in the negative territory. With all this, it is a continuation trend which we find in the channel starting from September 2018, and every time the price has moved, it has moved within the channel, touching the lower band and bouncing back. Even the recent January fall is also suggesting rebound in the very near future. The movement of the current price from 17,294 to 78.6% and also to the December 20 high of 18,844. This is in the academic sense of the matter, but practically what the market is looking for is the breakout, which is likely to be prompted by the December quarterly results. Price action data is a bundle of weak sentiments represented by falling prices, dwindling turnovers, ridiculously low delivery percentages, and the falling size of orders. Option chain support level is 17,000 and the next resistance is 17,500. Option chain pain gain point at the minimum at 17,500. Option chain appears to be neutral, but if we look at the pain gain points at various levels of settlement, it is moving from 17,500 downwards. Nestle, good food, good life. Competitive edge, very strong market. Growth in both profits and revenue on a long-term basis. Management bringing the company from the grips of loss at the height of Maggi crisis. Focused on growth. A company with inherently high intrinsic value, meeting the definition of Warren Buffett for a wonderful investment. Good food, good life, good profit, and a long-term investment. Thank you so much for your time. Hope you liked the presentation. Kindly share it with your friends. Let us have your comments, likes and dislikes. Subscribe to the channel if you have not done it already. Have a wonderful day. The video is for purposes of information, education and awareness only. This is not a solicitation or recommendation to buy, sell or hold securities. Kindly seek the advice of a competent professional.